This is ShadowQuant Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, July 27, 2026, and this is the New York pre-market. Now, let's get into it. The Nasdaq 100 is leading a sharp sell-off in pre-market trading, dragging the broader market into a defensive posture as investors brace for the Federal Reserve's policy decision later this week. With the crypto fear and greed index at an extreme reading of 14 out of 100, risk assets are under pressure ahead of a critical week of inflation data and central bank decisions.
Good morning. Let's look at the pre-market tape. The S&P 500 tracked by SPY is holding relatively flat at $738.93, up just 10 basis points. The Dow Diamonds is slightly stronger at $518.76, up 48 basis points. But the story is in the growth stocks. The Nasdaq 100 QQQ is down 1.12%, trading at $684.23.
A clear flight to safety. Let's see what's driving the corporate news flow.
Corporate activity is quiet today, with no major earnings reports scheduled for release before the bell. However, there are significant filings and developments to note.
Quiet earnings, but significant security and regulatory updates. Let's shift to the macro backdrop. The macro environment is defined by the upcoming Federal Open Market Committee meeting. The FOMC rate decision is scheduled for Wednesday, July 29th at 2 o'clock Eastern. This is the primary catalyst for the week. A packed week. With the FOMC decision on Wednesday, volatility is expected to rise. Let's check the risk radar.
The VIX, the volatility index, closed yesterday at 18.58, down 12 points from the previous session. While that is lower than its 5-day range high of 20.31, it remains elevated relative to recent averages. The broader signal, however, is the crypto fear and greed index at 14, which is in extreme fear. This suggests that risk assets, particularly tech and crypto, are oversold and potentially vulnerable to a squeeze if the Fed signals a dovish surprise. However, given the upcoming FOMC, we are maintaining a cautious stance. No credit warnings or geopolitical disruptions have triggered immediate risk alerts today. But the VIX compression is a warning sign that volatility may return quickly.
Extreme fear in crypto, but the VIX is compressed. A classic setup for a volatile FOMC week. Let's look ahead.
Here are the 3 items to watch for the remainder of the session and the week ahead.
Clear defensive positioning ahead of a high-stakes week. That is your ShadowQuant Market Brief. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.